We are with money market, and I was giving you an overview of a financial system which contains money market and some of the things that are involved, technical words like underwriters, brokers, dealers, various kinds of institutions that are there in India, intermediary, non-intermediary and all that, regulatory, then that business of risk-free market as opposed to risky market, share markets, gilt-edged market. I was talking about those things. Now today what I do, in that tree that I had the slide, there was one item in the middle, at the end of the top first row, called financial instruments. So if I have to talk about in details about the money market, I need to talk about the money market instruments. And money market is a short-term financial market. Money market is never long-term. The capital market is medium-term and long-term, but money market is a short-term. So, where to start? So I'm going to start with the most popular ones in the money market. There's a lot of discussion and utility of these markets. It's called the call market. So let's talk about the call market. Call market is a very short term market, money market, where call money is very short term money. But there are two other kinds of money which are not very short term. So call market, you have call money. This is an instrument through which money changes hand from one person, one institution to another institution. Call money, very short term. But two more monies are there. One is called notice money, another one called term money. Notice money, the other one called term money. Now, this call money, notice money, term money, their maturity varies, like when you have to return the money. Maturity means the money that you have lent will come back to you, or who has borrowed it should return it. That's the maturity, when it expires, the life of the money. The call money expires is very interesting in 24 hours. So you borrow money for 24 hours. And imagine how short term it is. So call money you borrow for 24 hours. Notice money maturity can vary between 2 to 14 days. And term money maturity can vary between 15 and 90 days, which is essentially a fortnight to 3 months. So they're very short term. I told you money market is very short term. They're very short term. Very why? Because short term can go up to 1 year. It's very less than 1 year. The call money matures in 24 hours, which is unbelievable. Now, let me explain what is this money market. It's very important, I tell you. So I took up the market which is very important and also very well known. Banks, at the end of the day, they are dealing with cash. Cash is coming in, cashing going out, people are withdrawing, loans are being taken, CRR money is getting ready. At the end of the day, particularly end of the week, banks have to get ready with the CRR cash for RBI in India. Now I've come down to India now, but that doesn't mean call money is not there in other countries. Every country has. But now my focus will be India, because you would be working in India primarily, and the jobs that you will have tomorrow, so you should know this. And then you can expand your knowledge later. So now banks, when they sit down and do this hisab nikas accounts, they see, अरे CRR cash तो नहीं है, थोड़ा mismatch हो गया, miscounting, miscalculation, what to do, then they go to the call market and borrow money. And it can also happen during the week. They are doing a business, deposits come, they keep a good calculation, itna CRR, this much excess reserves with us for them to borrow, the depositors. We can give out loan. Some loans were, big loans were supposed to be returned, the cash wasn't returned. Again, they're short of cash. But they need the cash for 1 day, 2 days, 2 weeks, 3 weeks, 1 month maximum. Where to go? Go to somebody who has the cash. I'm coming to that. Who has the cash? It's usually another bank which has the cash, surplus. Who makes a quick money, means income, by just lending it to another bank. And banks know each other. It's very safe. It's not an unknown investor walking into the manager's office saying that I want to open a company and these are my papers, I need a loan. He said, my goodness, let me do the research work now. Where is your company? Where you want to found? Who are the people? What kind of finances you have from your side? Enormous amount of questions, investigation kind of a thing, CBI investigating, and then the money is given to him. Here, banks know each other, they're in business every day, like they are in the fraternity, belong to the same club called commercial banks, they often lend each other. And the story in India is, call market, the main supplier of money, cash, to other banks is the State Bank of India. State Bank of India has the maximum surplus cash usually. It's the largest public sector bank. It's the largest commercial bank in India among all banks. Maximum number of branches you will see of State Bank of India. It has the maximum amount of cash, surplus cash. So call money is very interesting. Quick money, short notice money, you need cash. Depositors are withdrawing, suppose too much. Say the festive season is a classic example. During festive season, people go out of their way to spend. Either it's Eid, or it's the Dasera time, or the holy time, whatever. In foreign countries, it's the Christmas time, for instance, New Year. So there's a huge drain of cash from the accounts. People who don't have much money would nearly empty their account to buy things. All right, that's when, and now you have given out loans which, suppose there are not proper timings or loans are not supposed to be returned even, that can be the case, then you need the cash. Otherwise, the depositors will panic. Where is my money? I put it in your bank. That's another story. Banks getting into trouble. So call market is so sensitive. There is any change in macroeconomic situation in a country, call market immediately starts giving signal, particularly if it has to do the financial market. The recession set in the Western market, Western countries. All right, people panicked, withdrew cash. Indian stock market started going down. All right, the withdrawing crashed. They invested money, say the NRI investments. They came into portfolio investments, etc. And now they started withdrawing it. Withdrawing in where? People don't hold the cash when they invest. They all go to the bank deposits. So banks started giving out that money. The call market immediately should. I will show you the data, how sensitive it is. I will come to the data. And you would ask me, which you did not, that this call market, which has 3 types of money, the principal one is the call money, 24-hour maturity. How is the discount rate or the interest rate determined? The interest rate, for instance, call rate, it's called the call rate. How is the call rate determined? The call rate is determined by simple supply-demand kind of a market mechanism. If the supply of cash is more than the demand, call rate will be down. If the demand suddenly increases more than the supply, what it exists, demand is shifting out, the call rate would shift, start climbing up. As soon as demand falls, the call rate starts coming down. So call rate, hour to hour, it fluctuates like the stock market index, I tell you. But I don't want to show you that hour to hour data. I will show you a very average data, say a monthly average or something. or a yearly average based on monthly averages. I will show you data. Call rate is that sensitive, like any very living thing whose something like the body temperature or the concentration level, say, of a human being changes. Minute to minute it can change. Hour to hour it can change. Depending upon, like, you are walking into an exam hall, it will change completely. So, call money is one of the most sensitive, most important part of the money market of any country. In India it is true. It's the same thing. And the call rate, which is the interest rate that the borrower pays the lender, is determined by the demand and supply functions. Very simple. So it goes back to the original thing that I said. There are the deficit units and the surplus units. This transaction essentially is part of the core of the financial system. Now, when call money started in India, way back in the 60s, I think, then if you go back to that data, I won't go back, you will see that the participants in the call market, either as a borrower, which is usually the banks, non-banks could have borrowed also if they need cash, and the lenders who make money, quick income, by being a supplier in the call market, like LIC, for instance, can be participating in the call market. It has a huge amount of cash. What I found is, if I go back to the old books, I found all kinds of commercial banks were participants, either foreign or domestic. And here I want to just mention one word which will not make much sense. In India, you have two kinds of commercial banks according to the classification given by RBI. And you would often come across this term in RBI site, or in books. They are called scheduled commercial banks. That means there are non-scheduled commercial banks also. This one you will hear, the other one you won't hear, you won't see on RBI site. The non-scheduled commercial banks are essentially, there is a classification difference. I will talk about that later in topic 5. RBI classifies banks. They are all licensed, not that they belong to unorganized sector only. That will be non-scheduled, of course. Scheduled banks enjoy certain privileges that RBI can help them. RBI asks them to maintain a CRR, and they keep the CRR cash which they use to help them, etc., etc. So scheduled banks, if you become a scheduled bank, like all are registered students, but I am saying that some are scheduled registered students, some are non-scheduled registered students. If I do that, which doesn't make much sense here in this context, what it basically means, the non-scheduled banks do not have up to the mark performance, and RBI has not given them the status of a scheduled commercial bank. If you are a scheduled commercial bank, RBI gives you a number of privileges, facilities they provide, lending, etc., apart from CRR and other things, cash that they use. Now, initially in the call market, all types were operating, scheduled as well as non-scheduled. And remember one thing, I told you the data many years back, some year back or 1 year back. The banks that you see today as State Bank of India and United Commercial Bank and United Bank of India and all that, they were mostly private sector banks with single ownership or private partnerships, etc. There were about 20 to 21 banks were nationalized, and they became therefore public sector banks only in 1969. Mrs. Indira Gandhi did that. Now, the call market existed before 1969 in India. I don't know exactly when the call market started, but it existed. Now, at those days, you had the classification scheduled, non-scheduled. RBI said that. But banks were not nationalized and everybody was participating in it. Now, after it became nationalized, it became clear that the government gave a special status, RBI, on behalf of the government, to the scheduled banks to come in and the non-scheduled banks to go out. Simple reason is you cannot trust the non-scheduled banks. If they fail to make the payment when they borrow, RBI cannot intervene. It has to be a criminal procedure through court, which takes number of years to resolve. Court proceedings are horrendous in India. If it begins, ho gaya. Now, non-scheduled and scheduled, both types were operating in the call market. And after the nationalization of banks, famous 1969 nationalization, when you have all this Bank of Baroda and all that name that you see, they all ownership got transferred from private hand to public hand. That means government. And there were few private sector banks left. And I don't remember foreign banks when I was growing up. I remember some foreign companies like American Express, etc., had an office in Calcutta. I don't remember seeing Deutsche Bank and Hong Kong Bank and whatever you have now. Citibank, Standard Chartered, I've never seen them in my life. All banks we had in the neighborhood and in the larger neighborhood. One is an epsilon neighborhood, immediate neighborhood, and the larger neighborhood, wherever I went, were all public sector banks. United Bank of India, United Commercial Bank, State Bank, and State Bank has subsidiaries also. State Bank of Mysore, State Bank of Hyderabad, State Bank of Bikaner. They have subsidiaries also. They all got nationalized. And initially State Bank used to have another name. Do you know the name? Anybody knows the name? Pre-independence name? State Bank was not called State Bank. It was a name that was given to it much later. And it became the largest, very good, Imperial Bank of India. Those days, Imperial word was more popular. So, Imperial Bank of India it used to be called. And then, call market participants were also cooperative banks. I will talk about cooperative banks later. They are a very unique thing about Indian economy. It doesn't exist in many other countries. Cooperative banks. And in fact, cooperative banks, cooperative organizations, I've seen started in India, the movement, you can say, opening of cooperative societies and cooperative banks, etc., as far as early as 1907. They were first established, 1907, beginning of last century. Then you had the non-banks, as I told you, LIC, etc. They have surplus cash. So, if banks want cash, they are the obvious supplier of cash. All right? And LIC was founded in 1956 or so. So, by the time banks were nationalized, the call market was functioning properly and the banking sector was developing well, early 70s onwards. LIC was a big player there, and other non-banks also. There were other non-banks like UTI, etc. They all had cash and were participating in the call market. Then you have these, I will talk about, I mentioned that yesterday, RBI created something, agents, RBI's direct agents, like brokers in the share market. They mediate between second-hand transactions of shares, brokers, and you had the underwriters, the big guys for the primary shares. Now, RBI created for the government sector bills, etc., RBI created primary dealers. It's just new concept. So, primary dealers. I will talk about all these institutions later, but just know the names. These are directly under RBI. RBI gives them permissions. Usually public sector banks are primary dealers, some of the public sector banks, and some institutions are there. One of the most important institution or primary dealer in India, which was founded in the early 80s, is called the Discount and Finance House of India, DFHI. Discount and Finance House of India. We'll talk about that too later. One of the most important primary dealers in India. That was founded in the early 80s. Now, these are the institutions who were primarily functioning. All right. Now, reform started. 91, Dr. Manmohan Singh and company. The reforms were just not with the real economy, reforms were also there with the financial economy. And by the mid-90s, when the first phase of reforms were coming to an end, and also the government came to an end, the plan also came to an end. It was the 8th plan, if you remember, 1992 to 1997. All right, before the plan ended, the government ended, then there was uncertainty, political uncertainties. And so around 1996-97, something dramatic reforms started happening. As I told you, right from the beginning, non-banks, etc., were participating, because if you look at the banking sector those days, it was not very well developed. There was not a lot of cash. The economy was very small. Now the economy is huge compared to those days. So the cash that you transact in the economy is large. So every bank has a larger share of that cash, the money supply. Now those days when banks were in trouble, etc., the call market is essential for the survival. CRR, SLR were all there. So LIC was asked to participate, but today you don't need the help of LIC anymore. You don't need the help of NBFIs. And they were primarily lending, they were not withdrawing cash. They were not borrowing in the call market. Banks were borrowing. Question is, who is going to lend to them? Remember, call market is primarily to help out the banks. The question is, are there banks to help the banks, or you need the non-banks also? Those days non-banks were important, because LIC was a big institution. In India there was no insurance company, so people bought insurance from them. So they naturally had cash and they were asked to help them out, the call market. Now what happened in the 1996, 97, etc., that economic survey, I remember looking up, dramatic changes happened. They withdrew the NBFIs. बताए चलो आपको उधर और कुछ करना नहीं पड़ेगा. They withdrew the NBFIs, mutual funds, but they kept primary dealers there, because NBFIs were not under the direct control of RBI, but DFHIs and primary dealers, PDs, were under the direct control of RBI. So RBI was basically reorganizing the entire call market structure. NBI mutual fund को बताए हटो और कोई जगह रुपया डालो, maybe share market or something, all right, or give it to other NBFIs, invest there. And they left call market primarily under the operating zone of the banks, of course. In addition to the banks, the primary dealers became very important. And primary dealers became very important, particularly DFHI, Discount and Finance House of India, which was the earliest primary dealer. Now you have more primary dealers, there were 13 or so. I've forgotten the number, 13 or 15 primary dealers. That used to be the most important primary dealer in the 90s. It's still very important. So it left the market to the banks to operate, and outside organizations other than banks were DFHI and some other primary dealers. RBI, therefore, RBI has been doing this kind of a thing, therefore can take its hands off, don't have to worry about the call market, because it has given the responsibility to a DFHI, which is a subsidiary in some sense of RBI. This is exactly what they have done with NABARD, RBI. NABARD used to be a department of RBI. Then suppose mechanical engineering. Tomorrow you ask mechanical engineering to become independent. Okay? So the study regarding mechanical engineering, IIT Kanpur doesn't bother anymore, worry anymore. It functions autonomously. So NABARD used to be a department, I've forgotten the name of the department, Department of Agriculture and something was there, which has become NABARD. And now it functions autonomously, and it functions so well that it doesn't take a single pie from RBI to function. So DFHI has become very independent today, and it functions, and RBI's headache is over, because how much headache RBI can take? RBI has a lot of headaches. It has the foreign exchange market headache, it has the government deficit budget headache, and the entire government bills market headache. All right? Then he has his monetary policy, wagara wagara. So RBI is a mammoth organization, central bank. Usually it is true in all other countries. Now it has, what it has done, it has decentralized its responsibilities. You do this, you do that. I don't have to worry. If you are in trouble, need help, then come to me. Otherwise, you function autonomously. Okay. So the call market is very interesting today. You have the scheduled banks, yeah, I am coming to that, and cooperative banks are there. Both commercial banks and cooperative banks are there. Primary dealers, which have become very, very important. And I have a date here, it's very interesting, 1996-97 it started. And then I have a date from Economic Survey 2005-06, many years back, 6 saal purana, 6-7 saal purana. I have written here in italics, effective 6th August 2005, effective 6th August 2005, the non-bank participants except primary dealers would be completely phased out from the call market. Economic Survey 2005-06, page 55. Completely phased out. There will not be a single non-bank participant. It's entirely the banking sector. You manage your funds, help each other out, and you will have the primary dealers to help you in case the banking sector doesn't have sufficient help to give to their fraternity, to their fellow banks. Completely phased out. Now I take your question. You have a question.
You said that RBI made this NABARD. So all these institutions that are established by RBI, are they accountable to RBI or?
They are under, yes, they are accountable. There is some regulation, but they largely function autonomously, just like IIT Kanpur. Do you see government of India's that ministry, MHRD, Ministry of Human Resource and Development? Any minister or minister's under secretary or joint secretary sitting here and communicating as an office and communicating with the director and the registrar and the deans? It's a Government of India organization, but Government of India does intervene if required. There was some intervention recently about the pay scales first and then the JEE, some interventions. You must have read the newspapers. But that is not a regular affair. Regular affair of IIT Kanpur is run by IIT Kanpur. So day-to-day business of NABARD, whatever it is, they do. Primarily agricultural sector lending activities. They do that. But that doesn't mean RBI doesn't have any say in it. Okay? All right?
Sir, if the RBI would have been a private organization, would the government have any say in it?
If RBI,
Being a private organization, would the government
RBI can never be a private organization. Central bank can never be a private organization.
Federal Reserve in the US is a private?
Who said that?
So it's private, it's not government.
Federal Reserve Bank in US is registered as a private organization.
It's private, it's not under the government.
Federal Reserve Bank. Where have you read? Wikipedia is a dangerous place to go to. I've never heard.
So because there has been recently a documentary, the result of was in which the same thing was not the Federal Reserve, there is government spending in the US is entirely, whatever the government spends on the public is actually borrowed from the market. So that's why the public debt is like rising, going on rising. So in that sense, they were saying that Federal Reserve is not under the government. So that
So that is the nature of any central bank president.
It is independent of government control.
So out of the 7 governors of RBI, only 2 are appointed by the government. So out of the 7 governors of the RBI, only 2 are appointed by the
It's
president.
like the election commission. It is independent of the government control. Similarly, any spending that the government is doing, it's in terms of borrowing from the RBI, and the money has to be given back to RBI. So it is not under government control, but it's not a private institution. It's an independent institution. Similarly, with the federal government.
I cannot imagine central bank of a country will be a private organization.
So it's not a private organization, but still it's not under government's control.
I will check that out myself. The ownership pattern of these organizations, the central bank. We usually call central bank the arm of the government. It's not completely independent of the government. In some countries like US, it's very independent. In countries like India, it is not so much. But that doesn't mean central banks are entirely private organizations. I am not so sure. I have to check that out. Any other question?
So what is the difference being a private organization and being an
Private organizations, in the sense, it depends what kind of private organization you're talking about. You're talking about a public limited, private limited, corporate company, then you have to go to the company board, get yourself registered. There are rules and regulations. If you're opening a partnership, a joint partnership or single ownership company, there are registration processes. If you are a cooperative sector organization, which is not public, you have to get the registration done with the cooperative department of the state governments. Every state government has a cooperative department in India. Now, if you are talking about a public sector company, its formation is very different. Usually the entire share, the finances are entirely held by the government. The registration is very different. If it is a government company like Air India, Indian Airlines, then the petroleum companies, there used to be steel companies, fertilizer companies, many companies. Their registration is very different. They are not corporate sector companies. They are publicly owned companies, means government owned companies. And central bank, I always thought, is an organization which is part of the government in some sense, though it functions autonomously. This is what I always thought. Now I will check out the registration details of these banks, central banks, what they are saying. Commercial banks can be private, and in India it can also be public because government has nationalized them. We have something called nationalization. Industries can be nationalized, companies can be nationalized, banks can be nationalized. LIC was formed through nationalization. There were small life insurance companies at the time of independence. After independence, Government of India brought all of them together and formed a joint company called LIC. Since then it is called LIC, Life Insurance Corporation of India. They were all pre-independence, they were all small life insurance companies, privately owned. They were not doing well, some of them were doing well. Then what happened after independence was government put them all together and formed LIC. Similarly, our commercial banks originally were all private owned firms, companies were there. Then they were nationalized because they were not doing well but dealing with public money, people's money. So government feared that they may default on that, and they were defaulting. So government nationalized. Once you nationalize, it becomes a headache of the government. Even if they are not running at a profit, government will always bail them out. Say for they were national. 1969 it was done. GIC companies were all private companies. They were all put together called GIC, General Insurance Corporation. Achha. Now, so you have seen the call market. Now, where are the call markets, main markets operating in India? The main call markets that are operating in India are, according to my notes, Mumbai, of course, Kolkata, Chennai, Delhi, and Ahmedabad. Main call centers, call market centers, not call center. Call center is a different word today. Main call market centers are Mumbai, Kolkata, Chennai, Delhi, and Ahmedabad. And this, the call market, let me give you a number which is a very old number, but I still give you a number. Say before, during 91-97, the first phase of the reforms, 91 to 97, the average daily turnover in the call market, amount of money borrowed, etc., and lent, average daily, remember? Average daily during 91 to 97 was roughly about 6,000 crores of money borrowed, etc., 91 to 97. Now, 10 years later, around 2007-8, this average daily turnover, you would understand how the Indian economy has grown. The average daily turnover in the call market has become 21,393 crores. So, from 6,000 to 21,000, more than 300% increase.
Sir, how much is the value of money inflated?
Yeah, value of money have also fallen, sure, due to inflation. But the total turnover in the call market has increased. Now, if you look at the average daily turnover, I can get the data from RBI side, I don't have it, in say 2010, 11, 11 to it will be enormous. That's it. But let me give you a little bit of history about call market, how badly it was functioning. Around December 1973, banks were nationalized 69, and then December 1973, when the oil price shock came, in Indian economics we learned that oil price shock came, the call market, the call rate in the call market reached the maximum ever in Indian history, call market history. The interest rate was 30%. That means there was so much of shortage of funds. And RBI was not helping the call market properly, so that's why it happened. Since then, till roughly about Rajiv Gandhi's days of 1988, 89, 90, Rajiv Gandhi's 7th plan, since then, Indian Bank Association got so furious that RBI wasn't helping them much, and there were not sufficient supply of funds in the call market, and the rate can go to 30%, huge amount of it. 30% on 1,000 crores I brought. Imagine, I borrowed. How much interest you are paying? So they got furious. So Indian Bank Association is a bank association, Indian Bank Association. They got together and put a ceiling on the call rate. It was initially 15% and then reduced to 10%. It can never go up above 10%. So what it did, the ceiling, you know, in the market supply and demand analysis, if you put a ceiling, it cannot go up. There would always be excess demand for call money, because the ceiling is usually below the equilibrium price. So the demand is more than supply. All right. Normal case, if there is no ceiling, it will climb up to 30%. But if you put a ceiling way down to 10%, 15%, that means there would be huge imbalance in the market in terms of supply of call money and demand for call money. And the demand for call money would be large, very large. Clear? Okay. Now, but then after 1988, before the reform started, market started determining. That means the call money eased. There are a lot more players in the market those days. NBFI, XS, they became larger. They were intervening. They were participating. They said, okay, now we can transfer to the free market, call market again. But then the market rates have gone up a lot at times. So I will show you the call rates. In India, remember just one thing. In the current period, I don't have all the data. One is the bank interbank call rate, that is banks borrowing from banks. But RBI has also created the primary dealers, and particularly DFHI is operating in the call market. And DFHI is like the leader of a last resort or something, like if you don't have money from another bank, you go to DFHI. So what we effectively find today in the call market in India, there are at least two rates: interbank call rate and the DFHI rate. I hunted and searched RBI site. I haven't got any DFHI call rate data as of yet. Last 5-6 years I'm looking for it. Interestingly enough, RBI, although primary dealers are RBI organizations created by RBI, there is no DFHI call rate that I found. So the only call rate data that RBI publishes is the market call rate, which is between the banks lending and borrowing, which is called interbank call rate. It's very funny. I have to write to RBI someday and say, why don't you publish the DFHI call rate also, the data? They don't show it, DFHI data. But I've been told, I've heard that there are at least two call rates operating at any time: the DFHI rate, call rate, and the interbank call rate. Now I'm going to tell you something, one last point before you go away, and tomorrow we don't have a class. Also, we'll meet day after tomorrow. Don't think that the call market is the right or the privy of the organized money market, like the banks, etc., what we call. There is a very active call market in some parts of India which belong to the unorganized sector. Can you believe that? There are unorganized money markets which have not been nationalized, or they have not willingly come and become part of the organized money market in places like Gujarat, like Saurashtra. For instance, this is a fascinating area where you will find century-old banks which are in the unorganized sector. There is no CRR, no SLR, no RBI, no registration as such, but they are operating as a practice, as a habit, and RBI hasn't stopped them completely, put them in jail, hasn't done that. That unorganized sector, banking sector is there in some places, some pockets of India like Saurashtra in Gujarat, where just like organized sector banks, if those banks need funds, they're short of funds, they borrow from each other, and there is a call rate also. So we have call market in India, God knows for how many years. The call market that we usually talk about is the organized sector call market, where we will give you interbank call rate, etc., or the DFHI also has a rate. But actually there is a call market operating in India for centuries probably, where these various Parsi people and all those money-oriented people who migrated centuries back from Middle East and are in business, they have opened banking systems and running banking systems which were never part of the organized sector banking system. Banks which we don't know even. And there are also, those banks also have, those pockets of India have also a call rate. But I don't have any data on that. RBI doesn't supply any data. What kind of a call rate that exists? They have a call money there. Money is borrowed there at short notice or for a shorter duration. So therefore, you have three call rates at least in India. Unorganized sector, a general call rate, but it will vary, I think, from part of the country to another. If you go to Tamil Nadu, where also you have these unorganized sector banks called Shettiyas, age-old Shettiyas, which never became part of the organized sector banking system. Tamil Nadu में है, कोई महाराजा के जमाना से रहे हैं उधर, 200 साल 300 साल पुराना banking system. Unbelievable. There can be a call rate. In Saurashtra, Gujarat, you have call rate. So there is a general unorganized sector call rate. Then you have the famous call rate, which we have in all countries, the interbank call rate. We also have in India. I will supply data on that variable. And of course, you have what I have been finding out gradually is that there is a DFHI call rate also, which is slightly different. from the interbank call rate. DFHA operates in the organized sector, of course.